Hello guys, welcome back. This is Mr. Barasa and today I'm going to discuss about the do's and the don't of a loan. If you're planning to enter into a loan, if you're planning to borrow a loan, these are the factors which you'll be considering as the do's and the don't. I believe you want to acquire a loan. Now, I'm going to do the do's and then later I'll talk about the don't. Number one of the do's, assess your financial situations. You should always look at your assessing your financial situation. I believe someone may be taking a loan because of 1, 2, 3, but if you fail to assess your financial situation, then something may happen later. And this I'm considering you thoroughly evaluating your income and expenses and existing debt to ensure that you can afford comfortably and manage the loan that you want to acquire in terms of repayment. We all want to have that loan, but it's not a must for you to take a loan. If you can go ahead to assess that your financial situation and find that you are not capable of acquiring that loan, because at the end it will bring you down when it comes to financial stability. Number two of the don't, of the do's, research on the lenders. If you want to acquire this loan through a bank, through a microfinance, through SACCO, and whoever you want to acquire that loan from, number one thing that you should always do, you should always research on the lenders. Those people, that institution that's going to lend you this money, make sure that you do a research on several lenders so that you may get the best offer in the market. Or if you just go ahead and you choose to work with one lender who you haven't even done a research of others, then that can easily lead you to a financial crisis. So let's compare different lenders and loan options to find the best interest rates in terms of how they give and how you can confidently and conveniently return that money when it comes to payment and all that. Number three, check on your credit score. Always check on your credit score. A higher credit score can easily help you to get a good loan, and by saying that, I'm talking about the CRB. And when it comes to CRB, you have to consider the Metropole and TransUnion. These are all the factors that are being considered when you're going to take a loan. And now here I'm talking about you having to repay this loan. For example, if you want to acquire a loan today, they always check on your CRB as a Kenyan. That's what I'm talking about, your credit score. This gives you a higher, when it comes to amount that you want to acquire. A lender can confidently tell you are a good person from the character he or she sees from your credit score. So always do check your credit score to make sure that this score gets on a good or on a better point than being on the worst part of it. So when it goes to CRB, automatically it reflects on how you do the repayment. Number four, do's. You have to understand the terms and conditions. This is where most of the people do go wrong. You have to understand the details of that terms and condition. Don't ever overlook on anything on that paper. Make sure you go ahead to understand the terms and conditions. This includes the interest rates, repayment schedule, and the rate of repayment schedule, and even any other factor that is included in that terms and conditions. You have to thoroughly go through it, even if it's just to let that lender know that you want to be given time and go through all the terms and conditions, because this is why you may go wrong. You may just overlook on some things and then later it comes and hit on you very hard. So you have to make sure you go ahead and look into that terms and condition for your own benefit, for your own kind of knowing what you are expected, and if you fail to do 1, 2, 3, what you are expected and what will hit on you. So you must know your terms and conditions that are being given from that lender you've chosen to work with. Number 5, do's. Calculate the total cost. Now here, you have to understand all the costs that entails in that loan that you're going to take. Don't ever overlook on repayment period, including interest rates, including just even a mere thing that comes with that loan. You have to clearly and detailed look at what total cost entails. Starting from if for example, it's a loan that goes with if you are taking with the logbook, maybe for example, you have to look at what from A to Z. If at all you are doing evaluation of that car, you have to look into that, how much goes into that cost. If at all it's if a CRB kind of generation, how much do they charge? If it goes into, we call it if at all you want to access a logbook loan, you may be told that you have to do what we call tracking. You have to know the tracking cost is how much, and then servicing that tracker is how much, and then after that we have the processing fee, we have insurance fee. You have to understand all that cost, how much it costs at the end. That's where you will be able to know the total cost before you even start signing that offer letter at the point of requesting that loan. Number 6, a budget repayment. So in any loan, you'll have to pay either weekly, monthly, but most cases it is usually paid on a monthly basis. If at all it's a long term, it's a loan that you have taken it for long, be it 6 months, be it 1 year, be it what, it will always be paid on a monthly basis. Even if it's just 1 week, you have to consider what we call a budget repayment and ensure your budget can fit and accommodate the loan repayment without causing a financial strain. In terms of straining, I mean you taking a loan, you haven't even evaluated yourself that this budget, that maybe if it's 20,000 that you want to be repaying this loan, and then you are just taking that loan and you don't know if at all your budget, considering on what you're earning, how much you can be paying this without straining. So number one thing you need to know, you have to know your budget for repayments. In terms of monthly or if it's weekly, you need to consider on how you're going to pay this loan without much strain. And then number 7, do's, consider the purpose of the loan. Now, this is the most critical point of this, the do's. You have to do one thing, and we have to agree with you. Always consider the purpose of the loan. If this loan is going for a specific purpose, then only borrow if the loan serves the necessary and financially purpose, such as consolidating the high interest debt and financial crucial purchase. Now, for example, you're taking this loan and then you only have that one purpose, and then along you acquiring that loan, you just find something that's not really in terms of it's like an option. It's not that important. You go ahead to say, if at all I can get this money, then I can just take this loan. Remember, this loan you are getting or you are acquiring, it's on an interest. It's not just that it's free. It's something that you are going to pay for. It's something that is going to take you in a path of financial planning. And if you cannot plan this loan well, then it's going to create crisis when it comes to repayment. So that's why I'm telling you today to consider the purpose of the loan and make sure the purpose is important as it should be. And then number 8, the do's, which is the last point of the do's. Do always consult financial advisors. Always seek advice from financial experts who can provide you with the best information about the loan that you're going to acquire in terms of aspect of loans. Now today as I'm talking, I'm a loan officer. I have the experience over 2 years of lending money. I can tell you today, me as a salesperson who is coming to you to sell to you a loan, I'll always make sure that I'm maximizing whatever I want from you. And if at all you cannot consult on a financial advisor to tell you the risk and the don'ts and the do's of the loan, I'm telling you today, you will get yourself on a bad kind of a loan debt that is going to strain you and is going to drain you when it comes to finances. So those are the 8 do's of the loans. Now, let me talk about the don'ts. Stay tuned. The don'ts, number 1, don't borrow more than what you need. Very clear. Don't borrow the loan that you don't need. Don't borrow more than what you need. It's very self-explanatory. If at all today you want to borrow 100,000 for maybe business expansion, that's all right. But alongside that, you get yourself, you go to these lenders and they can tell you, we can give you 150,000. But literally, initially, you wanted to borrow only 100,000 for your business expansion. But going to the lenders, you are told you can borrow more than what you had in mind. Just stick to your point, borrow what you can, because only the one that you have planned is what can benefit you when it comes to generating income. And remember, these loans are at rates. It has an interest rate. You need to avoid unnecessary debts and interest costs. I mean. Number 2, don'ts. Don't ignore the fine prints or fine details. All loans have these fine details that you will always not be able to notice whenever you are not that keen. So always have that offer letter before you signing on that loan offer. Make sure you go ahead, read those fine details, read those fine prints, and make sure you understand them very, very well. Because the thing that if you ignore today, tomorrow they are going to be a burden to you, because you'll be told on that offer letter you sign, there was this and this. You're wondering, oh, how did I even sign this? I didn't see this. These are the kind of things that if you don't go ahead to be keen on them, they'll come and burden you later. Number 3 don't is that don't make multiple loan applications simultaneously. And by this, I must say, applying for several loans at once can negatively impact your credit score. Today, let me give you an example. You go to apply loan A, and you apply again loan B. At the same time, lucky enough, you get all these loans approved. So if all these loans are approved at the same time, I'm just trying to now to think at this point, you will go ahead to do the repayment of these loans on a monthly basis, assuming it's on a monthly basis. Now, you get that these loans, they will actually put you on toes whereby you'll not be able to comfortably repay them back on time. And this will impact on your credit score. That CRB, if you're a Kenyan, that CRB, it will now start showing your character as a poor character. And trust me not, if you go ahead to take these loans at the same time, they are going to impact negatively at your credit score. And if you have a negative character in terms of credit score, it will automatically lead you to future loan acquisition being impossible. And even if you are a benefit or if you are having a good score, it will affect you, and this will lower your amount, the amount that you can borrow for institutions, considering that you are in banks or you are in circles or you are even in microfinance. And that's how I'm telling you today, make sure that you don't make multiple loan applications simultaneously. And then number 4, don't rely solely on the lender's assessment. This is a very, very good kind of don't. Let me tell you today, I am a salesperson, I'm a loan officer, and the biggest thing that I can tell you today is that lenders may approve loans that you might not be able to afford. Do your own assessment. Through the experience, do your own assessment. I as a person, or I as a loan officer, I'll come to you and do my own assessment. At that point you want to acquire a loan, I will do the assessment considering of the maximum amount I can give it to you. Why? Because at the end I'm being paid on the loan amount I'm selling, or the how much I'm selling. So I'll maximize the every potential I can do for you. And by this I mean I'll come to you, sell to you the loan amount that I can sell to you at maximum amount. And at this point I'll come to you, do the assessment, and then this loan will be approved. And trust me, if you didn't do your own assessment of how much you're going to pay this loan, your budget, this will end up draining you in terms of your pocket, and you won't be paid, and you won't repay this money as it required, and this it impacts negatively. Negative when it comes to your score. Number 5, don't miss payments. Don't miss payment. This is number 5. Don't. And I'll tell you this today because most people do borrow and they don't know about this. If you miss your payment or late payment, this damage your credit score and leads to additional fees. In any bank, in any circle, in any microfinance or microcredit, this has always been a trick that you don't know. If you fail to make your payments on time, or if you do the late payment, if you even miss like 1 month repayment of your loan, this negatively impacts your credit score, and this at the end will impact you when it comes to borrowing nature of money in future. So always borrow and return on time. Always borrow and do the repayment on time, because this will negatively impact on your credit score. Number 6, don't use loan for non-essentials expenses. And this I can tell you today, if you go borrow a loan because you want to go and do a wedding, you are wrong. For ladies, it's okay, but for men, it's not. And if you can do the maths, that can be seen. I mean, don't borrow, and that loan becomes it becomes consumed, rather not being used in something that can positively generate that money back. So don't use a loan, or don't use that loan when it comes to not essential expenses. For example, like vacation. Is that really necessary for you to go ahead and take a loan? Will that be important of you taking that loan? Think. Don't. Me, I can tell you comfortably, don't ever take a loan because you want to consume, but borrow it because you want to invest. Borrow it because there's something that has really squeezed you at the corner, and really you want to get out from that. But remember, I talked about an emergency fund. If you haven't watched this video will show you how to create this emergency fund. And when you have this emergency fund, this is the right time for you now to do what? To take that money that is from emergency fund and have it here to assist you when it comes to the kind of things that can come up unknowing, or will come without knocking. I'm talking about an emergency, like you may be losing a job, like you may be your car, if you have a car has just broke down, like you may be maybe, like for example, a house has just a tree has just fell on your house. Like maybe you have just an emergency medical attention. Maybe you are sick. That's where the emergency fund comes in. And then number 7, don't forget about your future changes. If you take this loan, make sure that you are putting your future financial planning when it comes to considering this loan. So don't ever forget about potential future changes in your financial situation, such as a job change, increased expenses that might affect your ability to repay this loan. And this has been always a problem when it comes to applying for a loan and being approved this loan. If you go ahead, we're taking a big loan, for example, and you haven't even considered the expense that may arise or may increase in your future time or in your future life, considering that maybe you have a family, maybe some things have changed, you've got a child who is coming on the way. There are things that you should be expecting along the way as you plan for you taking a loan. So always consider on your future changes, because these will affect you in one way or another. And then number 8, don't ignore alternative options. Very good. If at all you can get this amount from your friends, from your relatives, from other institutions like maybe like you have a chama, for example, you are in Kenya, borrowing from your friends, family, exploring grants and scholarships if applicable. Go ahead and do that, because at the end, a loan is something that's not a walk in the path. You can't just walk one day and take this loan and you expect that everything is gonna be okay or everything is gonna be fine. A loan, when you take it, you are risking, because you don't know how it may go. You don't know how it can go in the next minute. And trust me, if you've taken these loans and you have signed against your security, maybe a logbook, that's a car, maybe a deed, that is your land, maybe against your household, your household chattels. I'm talking about household items like fridge, sofa sets, gas, cooker. Those things can be taken away anytime, and you can go ahead to have nothing. If you don't have a good planning, you will have nothing at the end. So, guys, today, if you have watched this video until this far, thumbs up. Kindly consider subscribing if you have had a good information about the loans, the do's and the don'ts. And if you have, if you feel like there is anything that you want to appreciate in the video, kindly go ahead to comment. And if assuming there's anything that you want me to expound more on that, you can also go ahead to tell me down in the comment so that I may make a video in the next video. Consider subscribing, and thank you for watching. And I believe by following these guidelines, you can make a more informed decision and manage your loan responsibly. Adios. See you next time.